A very good afternoon to all of you. So today I'm going to discuss about the regulatory aspects of virtual digital assets, which is more popularly known by all of us as cryptocurrency and also cryptocurrency. The first cryptocurrency was Bitcoins, and therefore people associate cryptocurrency more with Bitcoin than anything else, even though now there are a number of cryptocurrency which have come into being because there is nothing that it is regulated by a particular country or entity. Anybody can create a cryptocurrency provided you have the digital knowledge of how to create a cryptocurrency and you have set up an infrastructure to do so. So even a private individual can create a cryptocurrency, but the most popular cryptocurrency till date appears to be Bitcoin. And ever since this Bitcoins or cryptocurrency came into being, there have been debate all across the world whether how to deal with this. Because you see, ultimately, it became a medium of exchange to exchange the value. You see, the historically, the history of money or the currency, we may use different terminology, but the history of money, if we see, then thousands of years back, it started with bartering of the commodities. And then several sovereign governments and the kingdoms started using issuing coins or paper money to facilitate trade and commerce and overcome the limitation of bartering. And then what is issued as on date, what is issued by a sovereign government, we call it legal tender. So now the cryptocurrencies which have come into being has disrupted this age-old concept of issuance of money or the currency by the sovereign governments, as it is serving the same purpose which a legal tender does. That is the exchange of the facilitating the trade and commerce and overcoming the limitation of bartering. Now, I will first deal with the regulatory aspects of a cryptocurrency. Then I will move to the aspect of how it is dealt by Indian Income Tax Act, and then the taxability under the GST. So as far as the regulatory aspect is concerned, the first attempt of the government of India was to try to regulate the usage of cryptocurrency by RBI issuing a circular to direct the entities regulated by it to not to deal with or provide services to any individual or business entities dealing with or settling virtual currency, and to exit the relationship if already one has done with such individual business entities dealing with or settling in virtual currencies. So this was the first attempt of the government to try to indirectly ban the usage of cryptocurrency. But this attempt of the government to issue a circular by the RBI to banks and the various entities regulated by RBI to not to deal with any individual who is dealing with the virtual currencies was struck down by the Honorable Supreme Court by a judgment dated 4/3/2020 in the case of Internet and Mobile Association of India wherein the Honorable Supreme Court said that this circular issued by the RBI were unenforceable and illegal due to lack of proportionality, and therefore the cryptocurrencies were neither held to be legal nor illegal. All that because there was no direct ban by the government also. So there was no occasion for the Supreme Court to deal with the legality or illegality of the cryptocurrencies. All that the Supreme Court did was to strike down the circular which banned any entity, that is banks or the NBFCs, to deal with individual or business entities dealing with the virtual currencies. So that attempt was struck down. Thereafter, the government came up with a bill, namely Crypto Token and Crypto Assets Banning Control and Regulation Bill 2018, but it never saw the light of the day. Then the government came up with the second draft, the banning of cryptocurrencies and regulation of official digital currency bill 2019, which sought blanket ban on cryptocurrency, but that also remained on paper. Thereafter, the cryptocurrency and regulation of official digital currency bill, seeking to prohibit all cryptocurrencies in India and create favorable framework for creation of digital currency, issued by the RBI, was scheduled to be introduced in winter session of 2021. But that has also not seen the light of the day till now. So, as we can see, the government initially thought about banning it indirectly. Then it came up with the bills to ban the cryptocurrencies. But ultimately, I think the government has finally settled and made up its mind that they are not going to ban the cryptocurrencies, rather they are going to regulate it. So as on date, it seems that the government is more keen to regulate the cryptocurrency, the usage of the cryptocurrencies, particularly the negative side of the usage of cryptocurrency is that it is more easier to use it for hawala transactions and in the dark economy or the dark world. So the government, now one aspect before I deal with the regulatory aspect, one aspect which I want to talk about is how the crypto world works. Now the cryptocurrencies are bought and sold through crypto exchange. So just like there is a stock exchange, there are private exchanges, there are various numerous exchanges which allow you to buy and sell cryptocurrencies. Now the government, since it was concerned about the usage of the black money for money laundering activities, so it came up with a provision with effect from 7/3/2023. It came up with a notification which says that now the exchanges which facilitate the purchase and sale of the cryptocurrencies, now they will have to register themselves as virtual digital asset service provider with the financial intelligence unit, and once they are registered as with the financial intelligence unit of India within the purview of the Prevention of Money Laundering Act, then they qualify as reporting entity. So all virtual digital asset service providers, that means these exchanges which facilitate purchase and sale of cryptocurrencies, they will have to register themselves as reporting entity, just like the banking company or the financial institution, or say recently chartered accountants were also designated as reporting entities. Now, the job of the reporting entities is to have the KYC of anybody dealing with them, maintain a record of the transaction in the desirable format mentioned in the Prevention of the Money Laundering Act and the relevant rules. I'm not going to deal or discuss in depth with respect to the rules and regulation under the PMLA with respect to the maintenance of record, which is required to be done by the reporting entity. But all that I want to say is that now all these service providers, that virtual digital service provider, or so called the exchanges, to facilitate purchase and sale of cryptocurrencies will have to be registered with Financial Intelligence Unit under the purview of the PMLA Act, Prevention of Money Laundering Act, and they will have to follow the Prevention of Money Laundering Maintenance of Record rules. And if they come across any suspicious transaction, then they will have to suo motu report it to the PMLA authorities. And if any PMLA authority seeks, if they conduct any investigation and they seek any detail of the transaction conducted on their platform, then it is mandatory for them to provide and furnish the details as the PMLA authority wants them to provide. So it appears to be a very arduous task, but nevertheless, now we have a mechanism in place to ensure that these virtual currencies are not used for any anti-national activities or funding of the terrorist activities or drug or any other activities which attempts to do money laundering or evade the tax payment of tax. So this was the first, you see, step on part of the government to have some regulatory mechanism in place. So instead of explicitly banning the usage of the cryptocurrencies, now the government wants to regulate it. And in fact, that is the trend all across the world. Except China, none of the country has banned the usage of cryptocurrency. Almost all the developed and developing countries have various regulations to control and regulate the uses of cryptocurrency. And in fact, there is one country, El Salvador, which has in fact notified it as a legal tender also. But that is one extreme. There is China, which has banned it. That is another extreme. But more or less, almost all the jurisdiction in the world have tried to regulate the usage of the cryptocurrency instead of outright banning it. Now, the second aspect of the regulation is that under the Companies Act, now in the balance sheet and audited balance sheet and PL account, any profit or loss of transaction involving cryptocurrency or virtual currency will have to be reported or disclosed. Amount of cryptocurrency which is held by any company on the reporting date will have to be reported, and deposit and advances from any person for the purpose of trading and investing in cryptocurrency will have to be disclosed. So this is another step in the direction of regulation of cryptocurrency. Now we move to the second aspect of today's discussion, that is the income tax, the regulation through the Income Tax Act. Now in the finance budget of 2022, the government came up with the definition of the virtual digital assets. It is defined in section 247 capital A, and it is very widely worded. It says that virtual digital asset means any information or code or number or token not being Indian currency or foreign currency. So virtual digital asset excludes Indian currency or foreign currency. It includes any information, code, number, or token generated through cryptographic means or otherwise, and by whatever name called, providing a digital representation of value exchange with or without consideration, with the promise or representation of having inherent value or functions as a store of value or a unit of account, including its use in any financial transaction or investment, but not limited to investment scheme, and can be transferred, stored, or traded electronically. It also includes a non-fungible token and any other digital assets as the central government may notify. And it also has the power to exclude from the purview of the digital asset or virtual digital asset any specific uh, virtual digital assets. Now I will be using the term because in the Income Tax Act, they have not used the terminology cryptocurrency or crypto assets and things like that. The terminology used is virtual digital asset. So from the purview of the definition of the virtual digital asset, the government has the power to denotify anything which will qualify as virtual digital asset and but which can be excluded. Now, one item which has been excluded with effect from 1/7/2022 is gift card or vouchers, being a record that we used for goods or services or a discount on goods or services. So the gift card or the vouchers, which we get from the shopping malls and all that, which enables us to get the discount or buy some goods or services, that has been excluded. Another thing which has been excluded is mileage point, reward points, or loyalty card, which is given by all these debit card and credit card companies, and which is part of the promotional program also, and which can be redeemed only to buy goods or services or discount on goods or services. So these mileage points and all these which cannot be encashed, but which can be used for the purpose of getting the discounts on the purchase of goods or service or to purchase goods and service, they have been excluded. And also excluded from the virtual digital asset is subscription to websites or platform or application. So all these things are excluded from the purview of the virtual digital asset. Now, why they've been excluded and what is the significance of it? The significance lies in section 115 BBH, that is tax on income of virtual digital asset. Now, any income which arises from the transfer of any virtual digital asset, the rate of tax will be 30% flat. You will not get any deduction. There is no deduction whatsoever from this income. If it happens to be a capital income or capital asset, you will not get any deduction in respect of expenditure or allowance at the time of transfer of the goods. All that you will get as a deduction of the cost of acquisition of the virtual digital asset. But there is no further deduction allowed. So suppose if it is possible that one is acquiring these cryptocurrencies as a business, they are regularly in the purchase or sale of it. So even if they are in the business of it, if you are having expenditure for running of the business, you are having the people, you are having an infrastructure and everything, but nothing will be allowed as deduction. Similarly, if you are maintaining it as a capital asset and not as a business income, you are not treating it as a business income, but you using it as a capital asset. But if you are incurring any expenditure at the time of transfer of such digital asset, you will not be allowed any deduction, unlike other capital asset. Further, no set off of any loss or under any other head will be allowed against income from virtual digital asset, whether in form of business income or capital gain. And the income And loss from the virtual digital asset also cannot be set off against any other head of income. Further, the carry forward of loss is also not permissible. So the government, by these measures, in a way, has tried to discourage in trading or dealing with the cryptocurrencies, but there is no outright ban as such. The government has tried to discourage the usage of the cryptocurrency by prescribing a flat rate of 30% tax, whether you are earning that as a business income or as a capital asset. Secondly, there is no, carry forward of loss and no set off of this income against another head of income or loss under this head to another income. That is another point. Secondly, on any payment on transfer of digital asset, if you are responsible for making payment to a resident, then one is liable to deduct TDS at the rate of 1%. Now, this deduction is required if the consideration exceeds 10,000 rupees. But if you are an individual or HUF whose gross turnover does not exceed 1 crore or your professional income does not exceed 50 lakh rupees, then the threshold for deduction of TDS is 50,000 rupees. Now, another aspect in the Income Tax Act is that there is a delta exchange which has come into being with effect from this July 2024 in India. This is the first of its kind, which does not deal with the crypto assets per se, but it deals with the uh, derivatives of the crypto assets, that is future and options. So even though there is no, final opinion which can be given on this, but there are experts who says that dealing in derivatives or future and options is not equivalent to dealing in cryptocurrencies, and therefore they will not be taxable at this flat rate of 30%. They can be treated as a business income, and accordingly the income from derivatives or future and option from the cryptocurrencies will be treated as a business income and not taxable under 115 BBH at the rate of 30%. And also, this 1% TDS requirement is not applicable on the payment relating to this derivatives or future and options. Now, another aspect of the taxation is that with effect from financial year 22-23, that is assessment year 23-24, it is taxable at the rate of 30%. But what about the financial year up to 21-22? How it was taxable till then? Now, in my opinion, prior to that, and there is a judgment also of Jodhpur bench of the Income Tax Appellate Tribunal, wherein the concerned SSE acquired the cryptocurrency and was maintaining it as a capital asset, declared it as a capital asset, and claimed the benefit of capital gains tax rate as well as the deduction under 54F. And the Income Tax Tribunal said that even though it was not defined in the law prior to 1/4/2022, but it can certainly be treated as a capital asset, because the definition of capital asset under section 2 subsection 14 is very wide, which means property of any kind held by the SSE, whether or not connected with his business and profession, and it includes and shall always be deemed to include any rights in or relation to an Indian company, including rights, management, or control, or whatsoever. So, since the definition of the property itself is very wide, and as we all know that in the various judgments of the Honorable Supreme Court from time to time, even intangible assets have been treated to be capital asset. Goodwill has been treated as a capital asset. So there is no reason that one prior to 1/4/2022, if one was holding the cryptocurrency as a capital asset, then the benefit of capital gains should not be allowed. At the same time, if somebody was involved in the trading of the cryptocurrencies, then of course it will be treated as a business income. And as there is a treatment of any other business income or capital gain, the same benefit will accrue prior to 1/4/2022. So it is only from the financial year 22-23 that is the special rate of tax under 115 BBH will apply. And prior to that, if anybody has any earning from the cryptocurrency or loss from the cryptocurrency, then it will be dealt with as any other income, and there will be no special treatment of income arising from cryptocurrency. Now, the last aspect which I want to deal with today is the aspect of taxability under the GST law. As on date, unlike you see Income Tax Act, where there is now a clear mechanism to deal with the cryptocurrency by virtue of the provisions relating to virtual digital asset, there is no such special provision as on date under the GST law. Now, in the GST law, supply of any goods or services is taxable. And the definition of supply is very comprehensive, which sale that supply includes sale, transfer, barter, exchange, license, rental, disposal made or agreed to be made for a consideration by a person in the course or furtherance of business. So if there is anybody who is in the business of dealing in cryptocurrencies, only then the question of taxability under the GST law will arise. If somebody is merely an investor, then and holding it as a capital asset, then the question of taxability under the GST law will not arise at all. Because the sale, transfer, etc. has to be in the course or furtherance of the business. And the business cannot be holding any asset for the purpose of earning capital gain cannot be said to be for the purpose of business or in the course or furtherance of business. So that is one aspect. So if you are holding it as a capital asset, there is no question of applicability of the GST law. Only if you are a active trader, that is, you are doing it as your business, then only the question of taxability under the GST will arise. Now the question will arise as to at what rate of tax and whether it is goods or services. Now let us have a look at the definition of goods. Section 2, subsection 52 says that goods means every kind of movable property other than money and securities. And it includes actionable claim and growing crops and other things. So it includes every movable property other than money and securities. Now the question arises that the word money is wider than the word currency or the legal tender. And the word money is also defined in the GST Act. It says that money means Indian legal tender or any foreign currency check, promissory note, bill of exchange, letter of credit, draft, pay order, traveler check, money order, postal or electronic remittance, or any other instrument recognized by the RBI when used as a consideration to settle an obligation or exchange with Indian legal tender of another denomination, but shall not include any currency that is held for its numismatic value. So money includes Indian legal tender or foreign currency, and it also includes any electronic remittance or other instrument which is recognized by the RBI. So as far as electronic remittance or other instrument recognized by RBI is concerned, we can say that it is not recognized as by the RBI as a medium of exchange. But can we say that it is a foreign currency? Now the word foreign currency is not defined in the GST Act. Even though it is defined in the Foreign Exchange Management Act, but it is not defined in the Income Tax Act. Now in the Foreign Exchange Act, the meaning of the, one second, just give me a moment. Yes, the word currency is defined in the Foreign Exchange Management Act to include all currency notes, postal orders, money order, checks, drafts, traveler checks, letter of credit, bills of exchange, and promissory notes, credit card, or such other similar instruments as may be notified by RBI. So obviously it is not notified by RBI, so this is not a currency. Now, Indian currency means currency which is expressed or drawn in Indian rupees, but does not include a special bank note issued under Section 28 of RBI. Obviously, it is not drawn in Indian rupees, so it is not an Indian currency also. Foreign currency means any currency other than Indian currency. Now, the difficulty is that there is no definition of foreign currency even under the Foreign Exchange Management Act. The meaning of the currency is there, which says that may be notified by the RBI, but obviously cannot notify what is a foreign currency. So I believe that the meaning of the foreign currency will be the currency which is recognized as a currency, as a legal tender by any sovereign country. Now, as we have discussed, that this cryptocurrency has been recognized as a legal tender by El Salvador. So there is one country which is recognized as a legal tender. So one may argue that by virtue of the fact that one of the country is recognized as a legal tender, it is a foreign currency, and therefore it falls within the purview of money. And if it falls within the purview of money, then it goes out of the definition of the goods, and therefore it cannot be taxed under the GST Act. But my personal opinion is that one should not have or try to draw such a conclusion, even though it may be legally tenable in the courts of law, and one may succeed before the court of law also on the basis of this particular argument. But as we can see that the government is taking the steps under the GST law also to classify the cryptocurrency. They are now working towards whether it has to be classified as a goods or service. As on date, in my opinion, if suppose we ignore for the time being that it has been recognized as a currency by the El Salvador, considering the fact that it is a virtual digital asset and it is an intangible property. So, in my view, on the basis of the jurisprudence which has evolved over a period of time, it will satisfy the definition of goods. And if it satisfies the definition of the goods, then it will go to the residual category in Schedule 3 of the CGST Act, and it will be taxable at the rate of 18%. But as on the date, as I know, that the government is working towards classification of the cryptocurrency under the GST law. And once it is done, then you can safely say that they will say that this amendment is retrospective in nature, and they will accordingly try to tax or claim tax if we have been a trader of the cryptocurrency. So, to be on the safe side, one should take registration under the GST if you are a trader, not an investor, as goods under the residual category of Schedule 3 and pay tax at the rate of 18%. So, with this, I will conclude my today's discussion. I've tried in bits and pieces to cover the various aspects relating to the regulatory mechanism, the income tax aspect, and the GST aspect. And yes, last aspect which I would like to deal is that now under the income tax return also, the income tax return form has been amended, and there is Schedule VDA, which which deals with the income from virtual digital asset, and asks you to furnish details such as date of acquisition, date of transfer, head under which income to be taxed, whether business or capital gain. Here, even though the income tax return asks you to classify the head under business or capital gain, but in my view, it is immaterial, because no deduction or benefit under any provision of the Income Tax Act is admissible, whether you classify it as business or capital asset, even though the classification may have ramification on the GST Act. So it is only with the purpose of having a definite classification. If you don't want, if you are not dealing in business, then you should classify it as a capital asset, but there is no benefit which accrues to you under the income tax law. If at all, it will have relevance under the GST law, not under the Income Tax Act, because there is no deduction whatsoever which is permissible. And also, the last aspect is that under Section 56 also, if you have received any virtual digital assets without uh, any consideration, then it is also taxable in the hand of the recipient. So, with this, I will conclude my today's session. And if you have any queries regarding anything which we have discussed, or if you want to express your view, disagree with me, if you have any opinion on anything which I have not discussed, then I welcome you to join and have your view and ask me any question. Thank you.
Sir, I have one question. I'm C. Ajay Gupta.
Yes, sir.
So, I heard your session and read the Income Tax Act as well regarding the taxation of the VDA.
Yes,
I understand that this particular taxation came with effect from 2022, right?
correct. Financial year 2022,
Right.
assessment year 22
Right,
23.
right, right, sir. So if somebody has done some transaction, although some of the years are getting time barred right now, but
Right,
even though if somebody has done some transaction and report at for two cases possible, one is they never reported, and
correct,
second is they reported somewhere else. Let's suppose other sources and taxed at the slab rate, right?
correct.
So, what are the repercussions that you foresee for those transactions? Because the amount involved may be less than 50 lakhs, and most probably they would be never opened. The
The 148 will not apply, you mean to say.
Yes, yes, yes.
You see, if it is barred by 148, then the discussion becomes academic, because if it cannot be reopened, either it is time barred or it is because of the value that you are saying that it is less than 50 lakhs and therefore it 150 will not come into being. So I think there is no point in discussing it also. But nevertheless, for academic purpose, suppose there is no, I mean, it is not time barred and the value of the transaction is more than 50 lakh, then I believe that it will depend on, if suppose it is a income from other source, you have disclosed, and it should have been disclosed under the business head, then it will hardly matter, because I mean, whether you see 30 income from other source or business income, the expenditure in relation to that income is allowed as a deduction.
Right.
But only if you have disclosed it as a capital asset, wherein you have availed the benefit of 20%, suppose it is a LTCG and you have availed the benefit of 20% rate of tax. And if the department is of the view that you are a dealer in the cryptocurrency and you are not holding it as a asset because there are frequent transactions, I mean, there are criteria, you know, there is a circular also as to under what circumstance an income may be treated as a business income or capital gain. So, I mean, we have to go to those jurisprudence and the circular which is issued under the income tax act to treat a income as a business income or capital gain. And if you are able to defend yourself that it was indeed a capital gain, then of course there cannot be any implication. But if suppose the department succeeds, then you'll have to obviously pay the differential tax, depending on the slab in which you fall. Suppose you fall in 20% slab only, then also it is immaterial.
Sure, sir. Thanks, sir.
Hello, sir.
Yes.
Yeah, I wanted to ask whether the Bitcoin ETF also has the same 30% tax.
Yes, yes. Bitcoin is a virtual digital asset. So obviously it
ETF,
will
ETF, ETF.
ETF also. Yes, correct. It will fall within the purview of virtual digital
Virtual
asset and it
digital.
will also attract 30%.
Okay, all right.
You see, my session will be available in YouTube also. So if somebody has missed any point and want to have a, I mean, want to re-hear it, then it will be available on YouTube also, and it will also be available on my LinkedIn page. All the sessions which I do are always available on LinkedIn page and YouTube also. So I think there are no more questions from anyone. So I will wait for another minute and then I think I will close this session if there are no more questions from anyone. Mr. Kulkarni is asking how to calculate tax on FIFO basis. Mr. Kulkarni, can you unmute yourself and I will
Yes,
clarify
sir.
as to what is your query?
It's crypto taxation, how to calculate this on FIFO basis.
Means FIFO basis means?
Purchase and sale of cryptos. It is assumed that it is on treated as on FIFO basis. First
Yeah,
purchase,
that will,
first
I
sale.
mean, it will depend on your, I mean, the method of accounting. You may maintain your accounting, I mean, on the LIFO or FIFO, I mean, as the Income Tax Act allows. And It depends on all your accounting practices.
Okay. Okay. But it is a capital asset, no? It is not
No,
is
no,
as
not
a business.
necessarily a capital asset. It depends upon how you treat it.
No, if it is capital asset, then how it
If it is a capital asset, then obviously, I mean, I believe that unless you intend otherwise, it should be on a FIFO basis.
Okay, sir. Thank you.
Thank you. Thank you, friends. Thank you very much. So I'm closing today's session. Thank you all for joining.